What is going on, baby? Welcome 1% to time alignment and structure. So listen, this video is going to be on time alignment and structure, and you're going to see how every single video that we've put out there sort of correlates with the one before, but you just start deepening your understanding of everything and how it all comes together. So this one's probably midway through these video lessons. You've definitely watched the conditions video already, which is amazing because this is going to make a whole lot of sense now. And in the conditions video, I talked about how conditions work as a middleman to align time frames, right? And so I'm going to be showing you visually more how that works here. And yeah, I mean, you're going to learn a bit about the continuations, just the beginning of reversals and everything, and how to just properly align time frames. So one, you're not early to trades, or two, you're not too late. You don't want to get caught up in the manipulation moves, and you don't want to get caught up in like the bottom or top of the move, or you get the point. So I'm going to be teaching you how to align bias, draw liquidity, and entry by validating structure. And I'm going to teach you how to scale down from daily all the way down to the 1 minute. So this is something I really want you to engrave in your brain. And yeah, I mean, I'll show you more on the charts. I'm not doing a little slideshow for this because this one has to be a bit more interactive. I have to move around pieces and just show you chart examples really of how you start aligning time. And I'm going to show you in real time as I move through price action how I do that and how my thought process looks. But yeah, so let's start over here on the right side. Time alignment. So if you're seeing that the daily chart, for example, is bullish, you want to confirm that through the 4 hour, right? So the daily chart could look something like this, but on the 4 hour, you'd probably want to see maybe a pullback on the 4 hour to hit like a 4 hour fair value gap, and then confirmation so price can remain bullish on the daily. But what I'm trying to say here is that you don't just want to take daily confirmation and run with it. You need confirmation by scaling down a time frame. Everything is fractal, right? So you need to use the other time frames to help just form and validate your biases, your drawn liquidities, and everything. And so the same thing applies, right? If you have 4 hour like bullish chart, I'm going to show you how you wait for like 1 minute confirmation. 1 hour confirmation. If you have 1 hour PD arrays getting tapped into, you get 15 or 5 minute confirmation. If you have 5 or 15 minute PD arrays getting tapped into, you wait for 1 minute confirmation. Once again, if you have a daily PD array getting hit, for example, a daily bearish fair value gap, you want to get 4 hour confirmation that that daily bearish fair value gap is valid. What does that mean? You see like daily bearish fair value gap gets hit. Maybe you want to see an inversion of a 4 hour gap to the downside. Do you get what I'm saying now? 4 hour bearish fair value gap gets hit. What do you want to see? Most likely a 1 hour inverse to the downside to tell you that it's the start of a reversal. And so the same thing applies to everything, right? If you tap into a 1 hour fair value gap, a 1 hour bullish fair value gap, and you're thinking, okay, now we're ready for longs. No, you're not ready for longs just based off of that higher time from confirmation. You want to scale down, go into the 5 and 15 minute and get that validation through that. You want to start seeing that structure form on that lower time frame. And so really understanding this lesson is going to help you avoid getting stop rated so much and not being early to trades. And then, of course, the same thing applies. Let's say you hit like a 15 or 5 minute bullish fair value gap. What do you want to wait for? 1 minute confirmation now. So I'm going to teach you how to do that in this lesson. And yeah, so this is a bit of what like structure looks like. So there's two of my favorite things to see in the beginning of reversal. And this is like the most common, I guess, scenario we'll come across trading our models. Is you'll see a lot of time we're taking like kind of like the beginning of reversals, but we don't have to. We can take continuations. We can take whatever. But I'm going to show you what 99% of inversions traders' biggest problem is, and it's this. So when we tap into a higher time frame key level, such as like an hourly fair value gap, an hourly bullish fair value gap, you'll notice that people will immediately, let's say this is a 1 minute chart, and then we finally hit this like, 1 hour bullish fair value gap. 99% of inversion traders think that if after they hit a higher time frame PD array like that, if they get 1 minute inverse to the upside, that's it. They're ready for longs. And they try to just smack longs off the first inversion they see, And guess what? 95% of the time, more, this gets stop rated because they're not aligning timeframes. They're taking a higher timeframe confluence and just running with it, despite the fact that their entries are going to be on the 1 to 5 minute chart, right? So try to validate that for me. How do you just grab a 1 hour PD array and say, by getting 1 minute confirmation, that's all I need to see for me to take my trade? It makes no sense. It makes no sense. You're going to be too early. And yeah, when you tap into higher time frame key levels, you'll get a reaction, but that doesn't mean the move is ready to start. The true distribution isn't ready to start. It doesn't mean we're going to reverse now the move now that we hit the hourly bullish for value gap. It doesn't mean we're going to just reverse now. So you need to see structure start validating that. And so what you'll notice happens a lot is that after, let's say, like a 1 hour bullish value gap gets hit, sometimes price will go down and resweep that low. And then if we get the confirmation here that price wants to go higher, now we've started generating structure, because what do we know? Price hit this bullish for value gap. We created this lower time frame low that traded into that hourly bullish for value gap. We reswept that low and then got an inversion to the upside. So we're confirming that price wants to keep going higher and not just keep delivering lower below this low. So now we're starting to validate structure. Do you get what I'm saying? And I'm going to help you do that. So yeah. So here I have 3 examples really. And I could put 20 examples if I wanted to, but these are the 3 most common. First example. This is one way you can validate structure. One way is if you tap into a higher time frame key level, let's say you swept like London lows and you tapped into like a 1 hour bullish for value gap. If you wait for a 5 minute inverse to the upside, you've now confirmed a flip in order flow, right? 1 hour to 5 minute. This is time frame alignment. So we hit a 1 hour key level, or 1 hour fair value gap, and we're getting 5 minute confirmation that reaction truly is a flip in order flow. So this is time frame alignment, right? So this is valid. If we see a 1 hour bullish for value gap get hit, and then we get a 5 minute inverse to the upside of the leg that traded into that hourly fair value gap, then we know it's most likely that we'll continue going higher from here. So we've aligned those time frames. You grab that higher time frame confirmation and used a respectively lower time frame to confirm it as well. Now, what else can we see? This is that scenario I just went over. Price is in bearish order flow, right? We've been bearish for a while, same as we were here. And we take out that higher time from liquidity. Let's say we hit London lows and we trade into like a 1 hour for value gap. Cool. Now, most people, what are they going to be doing? They're going to be longing this reaction just off that bullish value gap getting hit and off London lows getting swept. Oh my God, that's all the confirmation I need. We're ready to buy. No, you don't know that yet. You haven't gotten enough structure to validate that theory. So what will happen usually is you'll get a resweep, right? Resweep of that low that traded into the hourly for value gap and took out London lows. You'll get a resweep, and then that next play with a clean trading leg, you get a clean new trading leg that resweeps this low. That's where, if you get an inversion, it's most likely to play out, and that's when you can look for like a MEC long, or if you got a PDI, and you target those unfilled gaps. So you have a resweep of the low that took higher time from liquidity, and you have a new clean trading leg. So these are both great examples of like when these reversals are way higher probability in comparison than just fucking longing because you hit a higher time frame key level. And now what's like the last one? This is just like a basic continuation, right? Let's say we're using the same, by the way, chart pretty much here, right? We've been in bearish order flow. Price then starts reversing and going higher, assuming we didn't take these initial longs. And that there's nothing wrong with that, right? It's not we didn't miss these longs. No. We just wanted more confirmation that price wanted to run higher. Let's say you were looking at London highs this whole time, London highs up here, and you were thinking, oh, okay, well, like I don't want to be, longing from down here. It just feels too early. I don't have enough conviction or enough confluence to tell me that, we're ready to reverse now. So what happens? You watch price for a bit, and you see that it breaks above this high. We start trading higher. And then we open up a 5 minute fair value gap in this leg. And so now we know, okay, order flow has flipped. We've been bullish. We've been breaking past, these highs, and we've been running through all this sell side and these bearish fair value gaps. Now it's most likely that we'll want to run to London highs. So what I want to wait for, let me wait for some structure to get created to the downside. So when I long, I have internal liquidity and I have external liquidity to target. So maybe you wait for like a little PDI, price starts chopping up, generating a bit of LR, and then it, you know, trades lower, hits a 5-minute fair value gap, and then you get that inversion to the upside, and now you can expect price, whoops, you can expect price to keep running higher, right? Once again, you hit a higher time from key level, an hourly bullish fair value gap, you sweep higher time from liquidity, then you get a resweep of that low that did that damage, and then you get that inversion, and now you can expect price to run higher. Let's say you hit that higher time from liquidity, you swept London lows, you trade into a 1 hour bullish fair value gap, you get 5-minute confirmation, that's valid, 1 hour to 5 minute. We inverse that 5 minute, you can expect price to run higher, right? So these are the scenarios where you start confirming theories through time frame alignment. Now I have in my notes here days that I want to show you. So let's see. And like I said, I try to be as recent with everything that I'm teaching you. So July, and I want to go all the way to June 23rd. Okay. So let's do that. June 24th, June 23rd. So let's look at a scenario like this. So it's 9 a.m., right? We swept London lows, and what do? We hit that. It skipped an hour. Oops. What do? We swept London lows, and we hit this hourly bullish fair value gap. Cool. That's great. So most people are thinking here, okay, I'm ready to long because London lows has gotten swept and we hit this 1 hour bullish fair value gap. Therefore, I'm ready to long. And so they'll probably try to long whatever inversion they can get off of here or whatever confluence they can get off of here. So let's say they try to long like this 1 minute fair value gap. They're thinking, oh yeah, this is all the confirmation I need. I have this 1 minute inverse here. We swept London lows and we hit this hourly fair value gap. But literally just looking at this surface level, like just not even trying to do too much analysis, is it valid? Do you think it's valid to say, okay, just because we swept London lows and hit this hourly fair value gap, we're ready to long, and you don't even have like a clean trading leg, really? No, it's most likely that this isn't going to play out. Yes, we swept London lows really cleanly, and we hit that hourly bullish fair value gap, but we haven't actually gotten any confirmation that price is ready to flip in order flow and start reversing. So we're not just going to take a 1 minute inverse here. There's two scenarios that we want to wait for. We can either wait for a resweep of this low and then get a better trading leg, or we can wait for a 5 minute inverse. Obviously here, we don't have a 5 minute inverse, so there's no 5 minute inverse we can wait here. So we have to wait for either a resweep or, yeah. And so what happens? Most people are entering longs here just based off of that, and price goes lower. Now what happens? Price resweeps the low that took out London, right? The red line is London. We resweep that low. I don't know if you guys can hear the fireworks and stuff in the back, but Miami's going crazy for the 4th. Resweep this low. And now we start getting that true reaction, right? We're validating structure. So now we know if after resweeping the low, now we want to inverse, now it's most likely that this will play out. And in this scenario, not only do we have that new clean trading leg and that inverse to the upside, I mean, this also just happens to have a... What just happened? Why am I on AT&T? We also happen to have a 5 minute, but it doesn't matter that this is a 5 minute. We've already gotten way more than enough confirmation just through that new trading leg and that resweep, right? So we get that inversion to the upside after resweeping that low that took London, and now we get the inversion, and that's the confirmation that we needed. Now we're validating structure. Now things are making sense. We have a clean trading leg. We have a clean internal high that we can break even at. We have an unfilled 5 minute where we can take profits at. Do you see what I'm saying? Like, the confluences and the internal liquidity is being generated to validate that higher time frame flip. And so then, of course, you can see that that's when price truly plays out. And there's your MEC long for a nice little 1 to 1.5, and it plays out beautifully. So do you see what I was saying there? You don't just want to take the first inversion you get off of like a sweep of a higher time frame low, or like a London highs or London lows, and just because you hit a 1 hour bullish or value gap doesn't mean price is ready to reverse. Even if you get an initial reaction, that's probably just a manipulation move off rip, because you hit a higher time frame key level. But usually you want to wait for like a resweep, or a 5-minute confirmation. And so in this case we actually got both, but it doesn't really matter. We can pretend this is a 1 minute, and this would be just as valid. But yeah, so this is like a beautiful setup. We love this. And then you can see on the 30-minute chart, this is what it looks like, right? The low that swept London then gets reswept, and that's when you get that nice trade idea. And so this doesn't mean that we have to flip completely bullish now, because we're not swing trading. We're not taking longs all the way up to here. We're simply taking our MEC model and our PDI model. And so we're targeting what? In this case, it's a MEC model. So we're targeting that unfilled 5-minute, and we get a beautiful, beautiful delivery up to the unfilled 5-minute. And yeah, I mean, let's see if there's like any other. There's a 50-minute, you break even there, target the 5-minute. And if, I wouldn't recommend leaving runners unless it's like very obvious. I would have just full TP'd there and gotten off for the day. But that's a beautiful, beautiful trade. And so you see that resweep there that I was talking about before. Now let's go to a different day. And this was during like pre-market. It doesn't matter. I'm showing you examples because it really works whenever. But obviously we trade 9:30 to 11. Now let's look at another day. June 20th. Okay, June 20th. Okay, let's look at something like this. So, going into this morning, I'm thinking, wow, we've been bullish for a while. We've been ripping up, but we just took out this significant buy side over here. We've taken out previous day highs. We've taken out London highs. Going into 9:30, probably expecting price to be bearish, but I'm going to need more confirmation on the lower time frame before I can just run with that. So I know we took out previous day high. That was that sweep of this high right here. And now I want to see hourly confirmation or 30-minute confirmation. And so cool, we get some 30-minute confirmation. So we're taking that hourly confirmation that we swept. Sorry, we go from previous day high, so previous day highs. And now we're also getting 30-minute and hourly confirmation that we're running through these gaps. And now what do we want to wait for? 5-minute confirmation. So yeah, it's a bit annoying because in this case, since we hit such a higher time frame key level, we can't just take the first like 1-minute inversion and run with it. Like we're not just going to take this. Unless you have super high conviction, maybe. But it's better to wait for probability to stack in your favor. And so in this case, what do we want to wait for? A 5-minute pullback to confirm that price actually does want to run lower. And we know that we have a reason for price to actually run lower, right? We want to make sure there's always a reason. We have all this low resistance liquidity right here. And we have London lows in Asia stacked right next to each other. So this is more than likely going to get swept. So I want to wait for a 5-minute pullback into price to then take shorts down to here. Notice how I'm not dying to catch the top here. I don't care to just short immediately after getting that higher time frame confirmation. I want to wait for my lower time frame to also align with my higher time frame. So after we've taken out previous day high, swept out London highs, and swept all that significant liquidity on the higher time frame, I'm now seeing the lower time frame validating that flip in order flow and that we are bearish. And so I'm thinking now, damn, let's see if we can find some shorts towards this LR, towards London and Asia. And so once again, daily to hourly confirmation of hourly P to raise getting ran through here. and now we want to see 5-minute confirmation. So let's see, do we have a 5-minute open up? Awesome, we have the 5-minute right here. Now we want to see that 1-minute structure get validated. So in our case, we want to see 1-minute confirmation through this bullish value getting inversed. And so what happens? Price runs up, and then we get that inverse, right? So here we got the inversion to the downside. What are we targeting? We're targeting the obvious London and Asia lows below us because we're taking continuation shorts. We didn't just catch the beginning of the reversal. We're catching the continuations because we didn't have any clean opportunities up here with no clear trading legs. As you can see, no good enough structure to be shorting from up here. But down here, now we're getting clean structure. We have price trickling up. We hit that 5-minute and give us a strong candle to the downside to inverse this bullish gap. And then we just target our London and Asia lows and bang. So that plays out nicely. So are you seeing how I'm aligning these time frames now, right? Now let's go over June 18th. Well, actually, there's one more thing I wanted to go over here. So now we've swept London and we've swept Asia, right? And we've also hit this higher time frame hourly bullish fair value gap. So let's say we were looking for 11 a.m. reversal because we have these great confirmations that price most likely won't want to go too far lower than this because we've swept a significant liquidity being Asia and London, and now we can potentially catch an 11 a.m. reversal if we get good enough confirmation. And so we can see here that we have this leg that swept. One sec, sorry. We have this leg that swept London and Asia and trade into that hourly fair value gap. Now, some people are probably thinking, oh, let me just long anywhere around here because we're getting a reaction. But no, you don't have a clear trading leg. Notice how you can't long here. Even though you have that great higher time frame confirmation, you still don't have lower time frame clean confirmation that price is ready to deliver higher. And so you wait for a clean trading leg to form, which eventually here we get this nice clean leg, right, where we have an obvious swing high and then this low. And, you know, we have that resweep of the low that took Asian London, and we have this 2-minute inverse to the downside. And so we can take this 2-minute inverse to the downside. There's probably a MEC opportunity here to target unfilled 5-minute. Yeah, there is right here. Bang, here's the 5-minute. And so this is like a 2-minute continuation long that we can take. And that plays out nice. If you don't have a 101 by the 5-minute, which in this case you do, so you can full TP for about 37 points. But if you don't have a 101, then of course you can let it run towards a 101, or in this case you have like a clean 15-minute which you can target. But yeah, I mean that's really how you play this, guys. It's just aligning those time frames, getting that clear structure, that structure validating your thesis, like, you know what I mean? Now let's see. This is June 20th. Let's look at June 18th, for example. Okay. So, oh, I like June 18th as an example. Actually, this is really good. I remember this day. So, let's look at this. Let's look at this. Going into the morning here, what do I realize? This is 8:55, right? New York session hasn't opened yet. We're generating a shitload of low resistance liquidity here. Cool. I want to try to find long opportunities, most likely going into this morning. But I see that we have some stacked lows here. We have like these two lows, both the sell side level right here and here, that are pretty stacked. So most likely, I'd want to see price. I'd want to see price take these lows before longing. Okay, so also here you can see, if you want to use even more time frame alignment, you have the 30-minute chart trading into this 30-minute bearish fair value gap, and then inversing this 30-minute. So that's like just utilizing fair value gaps and inversions to prove a certain bias. But back to what I was saying. Notice what I was saying before, right? We get the sweep of this low. We get the sweep of both lows that we want to see. Those stacked lows. Those were high probability lows that were most likely going to get swept. We got some triple equal lows stacked right here too. So that was high chance that this was going to get swept. And now going into the morning, it's 9:50. We get a super strong reaction from price, but can we really be longing this leg? So it's like, you notice here, and this happens a lot, where price will go ahead and take significant liquidity pools that are super obvious, and you're thinking, bro, like longs look great now. But you can't really long unless you have clear structure, unless you have a clean trading leg. So I'm not just going to long now because we got this 1 minute inverse. You know, there's still a bunch of other 1 minutes here. We need to wait for price to create structure that's clear enough for us to long. So we have a valid stop loss, so we have a valid TP. Because for all you know, this could reject right here, go sweep it one more time, and then the true move starts. In this case, price does end up reacting off of this, but since we have no clean trading leg, we can't take longs yet. So what do we wait for? We wait for it to pull back into a 5 minute fair value gap, which we can see here we formed a 5 minute fair value gap. We still have all this low resistance liquidity intact, so we're not missing out on anything. We can still take continuation longs. And I just want to see it pull back into a 5 minute now, since we got that hourly confirmation. We hit the 1 hour bullish fair value gap. And I just want 5 minute confirmation, time frame alignment, hourly to 5 minute. And that's why I say the conditions is such a powerful lesson to understand, because it just makes your drawn liquidity so powerful and easy. And like you get it right so often. And so here I just want to wait for it to pull back into a 5 minute since we got hourly confirmation. We get that 5 minute pullback. And then what do we get? 5 minute to 1 minute, guys. You know the gist now. Bang, 1 minute inversion, confirming that we are ready to long. And what do we long towards? We have a clean trading leg, beautiful trading leg, break even at this internal high right here. And we simply want to target all that low resistance liquidity because it looks very clean. And so this is like a nice 1 to 3. So we'll see how much this plays out. Oof, almost break evens, but plays out to full TP. So look at this. If we break it down here, 1 hour confirmation is right here. We take out 1 hour sell side, tap into a bullish fair value gap. And then we get 5 minute confirmation right here. So the time frames are aligning, 1 minute to 5 minute. We have 5 minutes getting ran through here. And then we open up a 5 minute bullish fair value gap. And then what's the last piece of the puzzle? The 1 minute right there. 1 hour to 5 minute to 1 minute. That's exactly how I tell you guys that you should be aligning your time frames. And like that's practically the whole essence of building a system. It's just combining everything so they work cohesively. So this is just beautiful, a beautiful example. And then we'll get into last day that I wanted to go over, which was June 16th. So let's go over June 16th. I like June 16th here. So it's like, okay, if we're looking at the hourly time frame, the 1 hour time frame, right? It doesn't take a genius to say, okay, we're bullish. We're very bullish, right? We've been bullish. We continue respecting bullish PD rays and delivering higher. But in order to confirm that we're bullish, we need to scale down time frames to validate that. So we don't just go into the morning and say, fuck it, we're going to long off anywhere because we're bullish. No, we want the time frames to align now. So what I see we have an unfilled 30 minute below. Awesome. So if we're going to be bullish and I'm going to long, I'd want to see price trade into this 30 minute, right? If price trades into this 30 minute, then I'll look for longs, through like a 5 minute confirmation or 1 minute confirmation. But I'm scaling down the time frames. And so as you can see here, we have the unfilled 30 minute below. We know we have this buy side above on the hourly time frame that we most likely want to go to, but we want to generate structure validating that. So as you can see, we're starting to generate that structure that we could potentially get a good long. We're leaving some low resistance liquidity behind. And then we want to see price trade into that 30 minute. So eventually, whoops, my God. And so eventually we do. but then 9:30 just decides to run it all. And so the only thing I'm showing you here is that, you know, if a higher time frame wants to continue bullish, it needs the lower time frames to work accordingly. So in this case, there was actually no entry on this, but I still wanted to show it regardless, you know, because this does happen. Sometimes you don't get an entry, but I'm still showing you how the time frames align. If we want to go to previous day high up here and the 1 hour chart is bullish, then we need to see a pullback and price to confirm it on the lower time frame. If there was an entry here, oof, that would have been just the most beautiful PDI ever. But price gets no entry, and then it delivers higher. So yeah, I mean, this is practically how you align those time frames. You get that hourly confirmation, you scale down to the 5 minute, et cetera, et cetera. And like I want you guys to practice just really looking for that. Like look at the days where price will go ahead, hit a bullish 1 hour fair value gap, and then once you get like that 5 minute inverse, that's when you've really confirmed a flip in order flow. And this happens all the damn time, bro. This happens all the damn time, and it's so important that people understand this, especially you guys in the 1%. Like I want you guys to really understand this concept of just time frame alignment, because it just makes you so much better at trading. Like it genuinely does. So it's really easy. This video with the conditions video, you should master drawn liquidity pretty much. And yeah, so like look at this, for example. I'm just pulling up random days now at this point, right? So I see a day right here where we sweep London lows. We trade into this 30-minute, we trade into this 1 hour bullish fair value gap right here. Swept London lows, trade into this 30-minute, sorry, oh my God. We swept London lows, trade into the 1 hour bullish fair value gap. And now, this is the same scenario that I showed you guys, right? You have the scenario here where, oh my God, let me put this back. Why is this the longest fair value gap ever? You have this low is the one that swept London lows. You can see by the red line. We swept London lows here. And so what are people going to try to do? They're going to try to long whatever inversion they get off here. For example, this first 1 minute inverse. And so they'll long this. And then what happens? They get stopped out because price goes ahead and resweeps that low that took out London. And then what do you get? You get this new trading leg with this 1 minute inverse right here. And this is the one that does the damage, right? Now let's say, in this case, I probably wouldn't take this though. Why? Because the inversion was a bit premiumed. I'm not getting the best entry, and it looks kind of choppy still. So I'm thinking to myself, maybe I'm gonna pass on this trade and wait for 5 minute confirmation. So I really know that we're ready to run all this buy side. And so what I do, I go on the 5 minute chart. I see, okay, we do have this 5 minute bearish fair value gap here that we've been holding. We swept London lows. We hit that hourly bullish fair value gap. Once we inverse this, then we should be ready to flip order flow. What happens? Price inverses this 5 minute, and bang, now we can expect order flow to flip and truly start reversing and go towards this buy side. And so that's exactly what happens. So that's literally the essence of time frame alignment. And it's crazy how I was low-key thinking, I was like, there's no way for me to even overcomplicate this, because this all comes back to like that conditions video and how I said the conditions is the middleman. It's what creates that transaction between the higher time frame and the lower time frame. And it's so easy, bro. Just like, it's crazy for me now, to be honest, at the point where like I'm in my trading journey where like I'm just like looking at this and I can just be on the 5 minute time frame and understand exactly what's going on. But yeah, bro, those 5 and 15 minutes are just the ultimate time frame aligners, bro. Like, holy shit, you get hourly confirmation and you find 5 minute confirmation, you're locked in. I want you guys to back test this on your own, and so you really understand how insane this is. And I would have gone more in depth on like the daily and stuff, but there's no reason to. You guys aren't executing on the daily. Like, this is exactly what you need to know. I hope this video made sense. I can't even tell. Like, sometimes, like I said before, I can't even tell if like I'm truly like making sense sometimes, because I feel like I'm explaining to someone like, oh yeah, this can is red. It's like, how do I even explain that? It's red because it's red. Like, to me, this is just like, it's valid because it's valid. Like, that's how it's just, oh my God, trading is a full on language, and eventually you just don't even think about it. But yeah, guys, Um, I guess the biggest thing you need to take away from this is like that hourly to 5 minute, and if you don't have like clean enough structure after hitting a high time frame PDA rate, wait for the resweep so you have a clean leg to take an inversion off of, or wait for a 5 minute inverse. I mean, this is the best way I can put it. Yeah, Lord. I hope I gave sauce here. I can't tell if I'm giving out some sauce here or not. Right? I can't tell if I'm giving out some sauce here. I feel like this is so saucy, but I already know all these things, so it's hard for me to like really understand. Um, but yeah, I hope this made sense. If you want to do some homework, show me how, after hitting a 1 hour bullish for value gap or any higher time frame PDA rate getting hit, like an hourly or 4 hour, how the 5 minute then translates over and confirms that flip and order flow. So send me like 3 examples of that. That'd be awesome. Or if you can just send me like an example of like times like this where price hits a higher time from key level and then it resweeps and then the true move happens, that'd be cool. So 3 examples, of either one of these scenarios, just one of each or 3 of one, or whatever, however you want to send that, but just 3 total examples. And I hope you guys enjoyed this lesson on time frame alignment and structure. Much love.